Advanced revenue management, revenue recognition rules. Okay, so in the last video we looked at roles and permissions. We've gone through routing, all the setup, and we're now really getting to the rubber hitting the road. This revenue recognition rules is really, really important. Let me make them bold. Okay, so revenue recognition rules define how revenue recognition plans are generated after a revenue element is created. You can create multiple rules to define the terms under which revenue is deferred. These revenue recognition rules are used to generate revenue recognition plans that determine when and how revenue from associated items should be recognized. Right, now, so for each rule, it says here what you can do, the method, the time, start, all of those things, right? So we'll get into that detail in a moment. Revenue recognition rules cannot be edited after they have been used to generate a revenue recognition plan, right? So if you want to edit them, you're going to have to delete that plan. The exception is that the rule name can be changed. You cannot delete revenue recognition rules after they have been used. Again, except if you go and delete any of their child dependent records. All right, so let's go to NetSuite. And the way you get to these rules is you go list, accounting, revenue recognition rules, right? And there they are. Now you'll notice that I have created, so this is the standard view. I've changed the view just because I like a different order here, right? Now, I've also gone and I've exported this list to Excel just so I can mark it up and it's a little bit easier to discuss in Excel. All right. So let's now go over here. So this is my answer 49183 that I've got in there. You'll see there's 3 suite answers related to this video. This is the first one. All right. And it really goes through here what I've already looked at. And now we get to, this is the important part here. When you enable advanced revenue management, system-generated default revenue recognition rules are created. Right, so they are just going to be there. These revenue recognition rules cannot be edited except to change their names. System-generated rules cannot be deleted. The following are the system-generated rules. Right, and you'll see there's default standard, default one-time direct, default percent complete, and then there's 3 here. These are all subscription related. So if you're not using subscription billing, this will not affect you. So if I go for a minute back to my export here, you'll see there I have in blue the first 3 methods, right? So there they are, default standard, and here I have the other 3, right? So I've got all the standard methods there. So these rules will be created for you by the system. And these are the ones that have then been added, right? Now, getting these rules right are going to be challenging, and you're most likely going to have to spend some time testing and seeing how it works. In any event, you are going to have these 6 rules available as a starting point, right? So I've got straight line here. I've got straight line prorate first and last period rate. Straight line using exact day, straight line prorate first date custom. Right, so I've got 5 different methods here. Okay, so let's go. Here they are. So here are those 5 different methods. Straight line by event periods recognizes revenue evenly for each period. Amounts are not prorated based on the number of days in any period. All periods recognized equal amounts. So if you start in the half of the first month and it's going to end in the half of a month later down the track, then irrespective of that, you're going to have the exact same amount posted to each period, right? So that might not work. I've not had many clients where they really want this one, because I guess it's not really technically correct. Straight line, prorate first and last period, right? So that sounds a little bit more interesting, where your first and last period will have prorated amounts. Recognizes equal amounts for periods other than the first and final period, right? So all the other ones will be full, regardless of the number of days in each period. Amounts are prorated for the first period and the final period based on the number of days in each period. Right? Straight line, using exact days, recognizes revenue amounts individually for each period based on the number of days in each period. Because each day in the term recognizes an equal amount, each period may recognize a different amount. Right? So this one feels to me like this is the most accurate, because you are recognizing actual days. So I think this has to be the most accurate one. In terms of, I guess, looking at the data and hoping they would all be the same for every month, it's not going to happen. So yeah, another discussion to have here for sure. Then the fourth one, straight line, prorate first and last date period rate. Determines the full number of periods in the revenue plan and allocates revenue based on the proportional period amount. Right? Then this last option, option number 5, is the custom option. Enables you to define revenue recognition terms that include uneven periods and amounts. When you select custom for the method, you define revenue recognition terms by entering information in the columns in the lower portion of the page. A rule using the custom method must have at least one line. Okay, so you've got a period offset there where you can essentially say, look, for the first 2 periods, I don't want to recognize anything. Amount percent, the revenue amount to recognize as a percentage. The percent sign is added automatically when you add the row. The total of the lines must equal 0. The read-only hash column number the lines as you add them. These numbers are not displayed in view mode. The name, recognition method, amount source, and revenue recognition start date source fields in the upper portion of the page are required. Other fields are unavailable except the optional fields Reforecast method and inactive. Right, so we've looked at the recognition methods. I don't think they're too complex, so you've got to go and decide which of these you want to use. Okay? Alright, so let's now have a look at revenue recognition amount source type. Right, so here there are, amount sources. The amount for a revenue recognition plan can be derived from a fixed amount or a percentage. All revenue recognition rule amount source options are event-based, and the event is the creation of the revenue recognition plan. The Create Revenue Plans on field on the Revenue Recognition Amortization subtab of the item record determines when the plan is created. Okay, so we will get to the item setup in the next video. Forecast revenue recognition plans always use the revenue amount for the revenue element as the plan amount. Okay? Some combinations of amount source and create revenue plans on values are invalid, and plans are not created for those combinations. When the combinations are invalid, an error message is logged in the revenue arrangement message subtab for the revenue element, right? So you got to check those messages if there's any issues. A link to the error message is included in the revenue recognition errors port list on the revenue page. Valid combinations are shown in the following table. Amount source, So you've got three options here. You've got event percent based on amount, and I'll show you I've got them all three here. So there's that one. Then you've got event percent based on quantity. There's that one. And then you got event percent complete. There's complete, right? Right, so create revenue for event percent based on amount, right? Create revenue. When will the revenue plans be created? Billing, revenue arrangement creation, subscription events, right? Amount and plan, percentage of the revenue element line, revenue amount that the invoice amount represents in relationship to the discounted sales price. That is, invoice amount divided by discounted sales amount times revenue amount and plan. Okay, so including essentially the discount. The second one, event percent based on quantity. The revenue plan will be created on fulfillment, right? Percentage of the revenue element line quantity that is fulfilled multiplied by the revenue element. So it's not necessarily total fulfillment, could be partial fulfillment. Event percent complete, project progress. So this is around projects only. Percent complete from the project record multiplied by the revenue amount. When you select this option, other fields on the rule become read-only. All right, so that is your revenue recognition amount source types. There's three of them. All right, let's now look at revenue recognition start date source type. All right, here we go. Here are the sources. There's 1, 2, 3, 4, 5, and I have 1, 2, 3, 4, 5. Right, so these ones in purple. All right, so revenue recognition start date sources. This field on the revenue recognition rule determines the source of the initial revenue recognition start date on the revenue recognition plan. The actual start date can be changed in the plan if revenue has not yet been recognized. So if you have recognized revenue, you cannot change the start date. The options are arrangement transaction date, event date, source date, revenue element start date, subscription event start date. All right. Let's start with this one. Arrangement transaction date, the date of the revenue arrangement. This is the default. The start date source is appropriate only when the item create revenue plans on value is revenue arrangement creation. Right? So you've got to have that setting right. Event date, the date of the event that triggers the creation of the revenue recognition plan. The event is determined by the option selected on the item record for the created revenues plans on field. Use the start date source when the item create revenue plan on value is billing, fulfillment, or subscription events. Okay. Source date, the date of the source customer performance obligation that generates the revenue element, for example, the date of a sales order. Forecast revenue recognition plans use the source date as the event date. Okay. Number 4, a revenue element start date. The start date on the revenue element record. This date is not generated automatically. When you use this option, a revenue recognition plan can be generated until a date is provided. Cannot. If you use this option, best practice is to use a safe search to identify revenue elements with missing dates. Right, so you got to go and do this manually, or I guess you could schedule it, but you've got to go and look at it. For information, see searching the revenue elements with missing dates. That'll give you more details on the search. To add the start date, edit the revenue arrangement that the element belongs to in the revenue element subtab, scroll to the start date field and select the date for an actual revenue recognition rule. For forecast revenue recognition rule, scroll to the forecast start date field and select the date. Save the revenue arrangement. And the last date source, subscription event start date. This option is available only when the suite billing, so if you're not using suite billing, this does not apply to you, feature is enabled. The date the subscription start becomes the start date for the revenue recognition plan. That makes sense. Do not use this start date with items whose create revenue plans on value is revenue arrangement creation. Right? And so that is your RevRec start date sources, which you can see here in purple. All right, so you can see on this sheet here, this should give you a little bit more of a sense of how these rules look and how these different options apply to them. All right, we're going to now move on to RevRec end date source types. All right, here we go. And we've got 1, 2, 3, 4, 5, 6 options. I have 1, 2, 3, 4, 5, 6, 7, 8 options. So I've got a couple more there. So, oh, there they are at the bottom. Right, so revenue, let's start here. The revenue rec end date source field on the revenue recognition rule determines the source of the default end date on the revenue recognition plan. The actual end date can be changed in the plan. The options are the revenue term in months. The end date is derived from the revenue recognition plan start date and the value in the term in months field. Term in months is a required field when you select this option. Exact months are used. If the start date is the middle of the month, the end date is also mid-month. This is the default RevRec end date source. So that's your default there. Revenue term in days. The end date is derived from the revenue recognition plan start date plus the value of the term in days field. Term in days is a required field when you select this option. Right, next one. Arrangement transaction date, event date, and source date. Use these options to recognize revenue immediately when the matching RevRec start date source values are selected. Next one is the recognition period. The end date is derived from the revenue recognition plan start date and the value in the recognition period field. When this option is selected, recognition period is a required field. The end date in the revenue recognition plan is the last day of the period, and partial periods are included in the count. Next one, revenue element end date. The end date of the revenue element record. This date is not generated automatically. When you use this option, a revenue recognition plan cannot be generated until the date is provided. If you use this option, best practice use the safe search. We've already dealt with that a little bit higher. Subscription event end date. This option is available only when the suite billing feature is available. So again, if you're not using suite billing, you can ignore this. The date the subscription ends becomes the end date for the revenue recognition plan. Makes total sense. The end date change impact field determines how revenue recognition plans are updated when only the end date changes. If you make other changes simultaneously, the end date change impact rule is ignored. The options are update remaining periods only, update all periods. Right? So you've got now an additional amount that you've got to recognize, and you can recognize only the remaining periods or across all periods. I would kind of lean towards the remaining periods. Okay, so RevRec end date change impact. We looked at that, update remaining or all periods. Then the next one you're looking at is Reforecast method. Right, so let's scroll down to Reforecast method. Right, the Reforecast method determines how future periods are adjusted when revenue forecast plans are recalculated. The option you select for the revenue recognition rule determines the default value on revenue forecast plans that use this rule. If you do not select the Reforecast method, revenue forecast plans cannot be recalculated. So that's really important there. You can avoid problems with forecast plan recalculation by selecting a default forecast method in the accounting preference. Best practice is to select the default forecast method even if you have also chosen to disable creation of forecast plans. Right? The options for forecast methods are follows. next period, right? So I've got next period there, it's one of the options. Then I got remaining periods, they're right there. Then I got last period, which was not on the list, so I've added it, and I've got manual. All right, so next period. This is the period following the recalculate as of period. The total adjustment is included in this period. The system generated default revenue recognition rules use this option, right? So you've made a change. There's now a difference that needs to be caught up with, and that's now done in the next period after recalculation. That's the default. Remaining periods. These are all of the periods from the period following the recalculate as of period through the last period of the revenue forecast plan. The total adjustment is distributed evenly across the periods versus in the previous one, the entire adjustment was put into the next period, right? Then last period. This is always the last period of the revenue forecast plan, even when the recalculate as of period is the last period. The total adjustment is included in this period, right? So this one and that one post the total adjustment in one period, this one next one, that one last, right? And this one splits the adjustment. Then the last one is manual. When you select this option, you must enter a value, a default value in the calculation adjustment period offset field. The total adjustment is included in the period determined by the value of this field. So this is where you decide exactly where you want it to be, if it's not one of those options, right? So, all right, and that takes us through to Reforecast method. Here are some of the other fields that we've discussed that you may or may not want to use, but really this is critical stuff to get right. You got to work your way through, you got to understand it. So good luck with that.